Good morning. Good morning. We gotta get over here to bum bum bum. Good. Oh, there it is. The email that I'm live. 4 hour. And run. Bum 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 bum. Boy, stocks look horrible. Horrible. Let's see. We're gonna open this up, and let's see if this still works. Nope. So we've got to go to properties. Yeah, that's preview. There we go. We'll use that. Why not? We'll use that one. Morning, Chris from California. I'm heading to California, I think in December. I hope. Okay, come on. Why are you doing this? Hit that thumbs up button. Brody, I don't blame you, man. I got here that, I mean, it says the U.S. Treasury's at 4.97 here on Fidelity. It touched 5 yesterday. I mean, it broke over 5. And if Jamie Dimon's saying that's going to 7, we're effed. But you know, like I said, there's some, I've said it many times, there are some stocks that are doing well. Look at this. I mean, in the algorithm, Meta was a 307 on September 29th. Name a stock that, 307 and you're at 312. It's not a huge move, but in this market, yeah, good move. Nice move on that one. Great move. I think Meta next week is I mean, just come on. We're going to 400. It's 16 times forward earnings. If they continue to cut their costs, I think you're fine. I think on that one we're fine. I only have a couple of things, so let's move to scans. It's probably going to be a short one because here's the thing. Until that 10-year comes down and we start getting buyers for these bonds, Japan's out, China's out, nobody's buying the bonds. Until you get buyers for those bonds, this is what you can kind of count on. You got to find pullbacks where stocks are pulling back, and in a stock picker's market, that's hard to do. I mean, Tesla's still sliding. Tesla lost all support. There's nothing there to support Tesla, and the big question is that the first of the grade 8 that actually loses everything? Here's the earnings calendar for this week. Next week, I'll pull this in. You got some really good earnings next week. Google, GE right there, RTX, defense contractor, Comcast, Merck, Boeing next week, Cleveland Cliffs on Monday. You got a lot of I'm going to bring up, this. I'm going to bring this up because I hate that they moved this. I get it. I hate that Savvy Trader moved this to pro. I get it. They're here to make money. They were giving it to us for free. I get it. I'm not upset. Let's see, 10 billion plus. That moves a little bit too much. We'll say 1 billion plus, because that'll pull out enough. Okay, let's start doing some scans. If you hear, and I don't hear it in the background right now, but if you hear a beep, 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 I'm defrosting my refrigerator. The ice maker froze up. I can't imagine we have anything that crossed up. Ooh, Taiwan Semi. That's going to 100. I mean, it's just going to go back to 100. That's a great company. You've got China in the crosshairs. Levered ETS, it's all on the short side. Short side. SRTY, SMDD, SDOW, DRV, FAZ, SDS, HIBS, SPXU. Ultra Pro short. Again, how can you argue with this? HIBS short 500, S&P 500, SDS, this is Ultra Pro short, S&P 500. I mean, it's clear. Financial bear, 3 times levered. DRV, which is the real estate bear. SDOW. I mean, we're clearly, it's not an upward trend anymore, I don't think. But remember, October is typically just a hard month. And your big moves typically come in October, and then you get a big up November and December. But I mean, it's looking ugly. It's just looking ugly. I can't imagine any Vanguard. Nope. Let's look at spider sectors. One that I want to look at is XLU again, because I just don't know if that's even button hooking right there. Whew. That's got no support. Let's look at XLF. Bye-bye. I got to go to a famous butcher shop today. I'm going to buy some meat. Your boy's getting meat. 4 hours, XLF. Yeah, look, I mean, that's button hooking. Use that 200-day right as its resistance. Let's look at the Dow. Nope, nothing on the Dow. Let's see if NASDAQ 100 is going to have something. Let's look at S&P. S&P 100. Nothing. Let's look at energy, because, I mean, I still love energy. Let's scan it. Yo, Brandon. BROG. Bruges. Net Power. That's a SPAC. NPWR. Hold on, I gotta text somebody. I just have to text so that I know. Bum, 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 bum. Man. New Power, they are not making money. They have, price to sales 8,374. That's crazy. Clean provision of clean energy technology. The company was founded. Have you listened to the trading podcast here? Let's see. Oh, you know what I need to do here? Hold on one second. I'm gonna go over here, put you there, and then I'm going to do something. YouTube Studio. Larry. Live. I do these lives and it's funny because it never automatically monetizes it. All it does is put a freaking commercial before you start watching for 15 seconds or something, but at least I make some money there. Everything else on the channel is monetized, but here, Brandon. Let's see. We're going to your channel, and then here's an ad from Truist, and we'll end. But hit the song.
Get the best tech talent at your fingertips.
Give me another one. Wow.
Because innovation.
There.
Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in to.
Or any of your questions, feel free to hit me up. It's good to be back. Look exactly the same. I will talk to you guys tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.
Figure out how to
Tune in daily, don't miss a single show.
But it's AI, so I don't
Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell.
I find it
my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves.
But it can't be that hard. I mean, seriously, that cannot be that hard to play on guitar or anything. Okay, strategy tester. We're going to go down to the 4 hour. What I want to do is run a SPY through the 65 minute. Let's see about the 65 minute. I got to figure out how to. There's a lot of red up here. A lot of red. PXD's up. I think you're going to see a pop today. I don't know. Just stop the earnings. Let's see. Revenues exceed most, but came up short in other areas. We discussed the idea of a dividend cut. Yeah, call your dad. AT&T beat earnings. I mean, do we have to go here? You know, do we have to chart AT&T? The road to $20 is being forged. Let's say AT&T. We're just gonna let's go max. I mean, this is back to what? 1993? If you bought in 1993 AT&T, just understand, you've lost 0.39%. And maybe that's a little bit unfair. Let's see about total return. We'll do total return. Update chart. And we'll select, I think VOO may go back that far. No, we want symbols. I think VOO may go back that far. It might not, though. No, VOO started way back then. Did SPY go back that far? Let's see if SPY went back that far. I don't think so either. Oh, SPY does go back. 10/18/1993. Yeah. Just, I mean, yes, you've made 291% in the in the dividend. But, I mean, look at SPY. So, HUBC. Let's look at HUBC. One year. Yeah, but that's nothing, Brandon. You want to see one? Let's look up SEDG, who literally on their earnings call that they announced earnings early yesterday, announced they have no buyers of their solar equipment. They literally announced that they have no buyers of their solar equipment. I mean, I'm getting out of this one. I mean, it's at $80.29. It's down 30% today. Here's the 4-hour. But I'll look at Savvy Trader with that one too. That's where I bought it. I mean, it wasn't too long ago. June, this was a $300 stock. It's at $80 today. They can't get people to buy solar equipment. That this is higher for longer. No, he's not. He's bailing out. And I didn't. Full disclosure, I didn't watch his speech last night. But I will tell you, from Republican and Democrats, everybody's saying it was a really good speech. I mean, listen, maybe the guy took some Adderall. I mean, there had to be some type of pill that he took to wake up. I'm not a Biden hater. Full disclosure, voted for Hillary, voted for Biden. I'm not a Biden hater, but the guy's too old. He's my dad's age. Yeah. But SEDG will go over. I'm just looking at SPY. SPY and QQQ. I mean, you just have there's nothing. Nothing good. So, let's see. We'll probably start the podcast now. I do have to look up. Let's see. News. And we'll go trending news. Let's see. That's actually. Boom, 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 boom. This is why Mara's up. We'll give this one a bounce up. Bitcoin up over 30,000. 30K. Let me see. Does Seeking Alpha actually track Bitcoin? Yeah, look at that. BTC. Look at Seeking Alpha. Look at that. Love Seeking Alpha. Man, the more I get into seeking alpha, I'm like, okay, if I'm just a casual, I don't want to do charts, I don't want to do algorithm in TrendSpider, I don't want to do that kind of stuff. I just want to casually chart stuff. I want to compare. I want some analysis. I want to track my own portfolio. I want my portfolio graded. Yeah. I mean, the health score here. This is the health score of the core portfolio. 6 stocks strong buy. 2 stocks buy. 28 stocks are neutral. There's nothing in a sell. There's nothing in a sell. How you compare your portfolio is in the top 29% of all portfolios. I mean, this is, watch out. You have one stock at risk of performing badly. Let's say one stock. Which one is XLY? That's because of Tesla. I mean, you're telling me I should get rid of XLY? No, I don't believe it. Your dividend risk, TSM. That's risky, they're saying. Your portfolio is doing great. Your portfolio valuation grade is lagging. Valuation, yeah. I mean, it's a high valuation because it's on TLT. Let's look at TLT. I mean, I think I have the inverse of this one. Yeah. Long ago, you'll remember there was a man named Tom, I think last year, who was a regular listener of the podcast, who liked to think that he was a co-host because the guy took over every conversation on Facebook. But long ago, he was there, and I believe it was around this time. Maybe it was around this time. Hey, you should buy TLT. The 20-year Treasury bonds are going up. The rates are going up. Buy TLT. Well, I said bond funds are not the way to play bonds. You want to actually buy the bond, get the 4 or 5%, and then maybe the bond actually appreciates in value. But what have we seen? Nobody's buying freaking bonds. Nobody wants bonds. So you can give away 7% on the yield, and nobody's going to buy it. So that's the main thing, and that's why you should stay out of this. I like this though. This portfolio check. Okay, we're going to go over to Seeking Alpha, and we're going to go news and then trending news. Bitcoin is that one. This is core portfolio, so we're going to have to put this one in there. I mean, here's the thing. If you're anti-vax, and I understand that there's not, I mean, the anti-vax movement came, did it go? I don't know. I mean, maybe it did. But if you're anti-vax and you're anti-stuff, the drug makers are looking at putting freaking shots of weight loss drugs in kids. I'm not anti-vax. I'm fully vaccinated with Moderna. I did not get a shot this year at all. I got COVID in July. Kind of consider that to be probably immunity. But before that, I had 4 or 5 shots of Moderna. Didn't have Pfizer. I had 4 or 5 shots of Moderna. I liked Moderna. I trusted Moderna more than I trusted Pfizer. Don't ask me why. I do have a couple of friends who work in the virus category, I guess you'd say, for government agencies, and they said, "Hey, trust the Moderna one." Tom is nowhere to be found. In fact, he kind of, I haven't heard from him. I'm glad. I mean, I think he started a group with a few people from the Facebook group. I think there were 4 that went over. Not even 1%. I mean, if they want to go over there, they can. I think the first half of this year, where he was telling me don't invest in tech stocks, they're overvalued. That kind of says it all. Where's my water? There's my water. I feel very masculine drinking out of a straw. Let's go back to Eli. See, Seeking Alpha, I can get lost just reading the freaking news articles. S&P futures down, drop down, week in view. Yeah. Yeah, because here's what it is, Scott, and it was, you're welcome. And listen, I only know this because I read and I asked, and here's the value of having Fidelity. You get, and I have a financial advisor at Fidelity. The guy's name is Stuart. If you want to move to Fidelity and you have more than $2,500, just let me know. Email me. I will email Stuart. I will get him connected with you. I think he gives you some type of bonus. I get some type of bonus too. I don't know. It's kind of like a handshake deal that I have with Stuart. Stuart is fantastic. And Stuart advises me. Do I listen to his advice? Not 100%. But I do respect his advice. And he kind of told me at the beginning of the year, he's fully credited with this. Do not get into bond funds. Bond funds turn over their bonds all the time. And so you wind up just trading the yield for the actual asset. So, yeah, Christian. They wanted to put me. I talked to my mom about this a few months ago. They wanted to put me on ADHD medication when I was a kid. Morning, Cecilia. We were kind of hyper. Listen, if you're not getting into, look at this. I mean, this is here. We're going to include this one in the newsletter as well. And oil is the play right now. I think natural gas, they did shut down natural gas thing in ETFs. There we go. We're just going to put ETFs in there. I don't have much. See, I could literally go through Seeking Alpha and get the entire podcast. I don't need to even research anything. I just need to go in here. 4 stocks to watch on Friday. Ooh, look at this. CSS stock fell. Shares added more than 5% after Bloomberg reported the Ireland-based drug maker was exploring strategic options, including a potential sale of the company. Ooh, if you're up 5%, that's not even like crazy. Let's look at the valuation and stuff. Let's look at Jazz. So Jazz, it's an Irish strong buy. I mean, look at that chart on a pharmaceutical company that's looking to sell. Hoofa. Here is, let's go down to the description. Where is it? There it is. Identifies, develops, and commercializes pharmaceutical products for the unmet medical needs in the United States, Europe, and internationally. The company has a portfolio of products and product candidates with a focus in the area of neuroscience, including sleep medication, movement disorder, and oncology such as hematonic and solid tumor. I know nothing about this shit. I'm not even going to read it. But look at their revenue. I mean, that's pretty solid guidance. There's one hold, one buy, Seeking Alpha analyst. So there's only 2 people. You can't do that. Wall Street, 9 are strong buy, 6 are hold, 1 is, or 6 are buy, 1 is 3 are hold. Bulls say the valuation of Jet has gone down a decent amount, which opens up a solid price. There's no bears. This might be one, let's take it. This is one. We're going to go back to that article. I'm going to take this, and we're going to put this. I mean, this is the value of Seeking Alpha. This is where I geek out. And if you like reading as much as I do about stocks and stuff, this is where you can get ideas. And that's why I say I think it's worth. I don't think you get this trending news in the free one. You might. I mean, you very well might. I've got energy and tech. And you get to highlight which ones you want. See, it's down more than 1%. American Express is. Yeah, Christian, you're right. I mean, that's the problem is that, I mean, you could be perfectly satisfied with a 5% yield on the 10-year right here. 4.95. That was 4.97 earlier, so you're going down a little bit. I think this update's live. Let's see. 4.95. I think it was 4.97 earlier. Probably updates pretty accurate. But 4.95, that was over 5% yesterday. That's the first one. If you just spam in and out of your articles on Seeking Alpha, plus use screenshots, you can get the articles for free. I love reading the news and stuff. The things that kill me on Seeking Alpha, Meta seeing better ad spending. Snap will take time to recover, analysts say. I still think Cecilia Meta's just one of the best. God, I need to load up on Meta. Sun Car can offer various online insurance solutions. Wow. That's a Chinese. Well, we got 4 articles just in the time that I was sitting there reading this. Crude oil ramps up higher. Crocs gains after Raymond James calls a bottom with positive momentum. Solar stocks plunge. Yeah, this is the one. Did I put this? Let me see. We're going to put this. Okay. We're going to put this article in there. I'm dumping SEDG. I'm getting out. I don't even want to wait for the rebound. We're just going to put this sighting. Okay. Strong sell. Whew. God, I wish I would have listened to the analyst and not thought I knew better. Okay. We've got a bunch. I think we've got enough. Let me look at SMCI, see if there's a news. 7% on Thursday's fears over high interest rates overshadowed the company's announcement that it started shipping servers using in a statement. The new servers are designed. Despite the news, the broader stock market has Federal Reserve. Yeah. Again, I love Seeking Alpha. I mean, God, such a great website. I geek out over it. I would pay $189 for this. It's become pretty crucial for me. Okay. We're going to look at SPY. Got you out. Okay, I'm going to hit record now. If you have a stock that you want me to look at, type it in the comments. Hit the like button as well. Make sure you're subscribed. But if you have a stock that you want me to look at, I will not look at it during the podcast because I typically just look at my screen and podcast, not necessarily the chats. But I will look at it afterwards. So if there's a stock, Netflix 406. Sometimes I miss. SEDG, I missed. What's that? 80% downturn. We'll go over it. But SEDG, I missed. But Netflix, that was a no-brainer. They even outlined it. And yesterday, Devon buying Marathon Oil. MRO. How can you argue with this one? This one's going back to all-time highs. They'll announce. They might even announce it, before then. Devon at 49.11. He'll look if it's good. Yeah, if it's IONQ, I'm in. If it agrees with my philosophy of balls out, yeah, I'm in. And no, it didn't perform as well as April. So this was the stock in April, and I thought it looked very similar, but it didn't. It kind of missed out. You have no confirmation whatsoever right now on IONQ. I think you're looking probably at $11. That volume shelf right there looks pretty juicy. We can bring it back to more recent times since it doesn't trade all that much. We'll bring it back to the May time frame. Look, $11 is kind of $11.50. I think you're fine. Okay, we're going to go back to SPY. But I will look if it's good. You're right. I look over every now and then. I got my teeth whitened. Okay, stock market just opened up. Do I have the S&P heat map? There we go. We're going to go over that first. We've got this. Okay. Okay. Here we go. Good morning. It is Friday, October 20th. I've been goofing around on YouTube Live, but I also am. It is defrost your refrigerator, dear, here in Gary's household. So if you hear something beeping in the background, that's exactly what it is. Where are we on SPY? We're out. Look at the algorithm. Got you out with a half-point gain. We used that 200-day as resistance level. It didn't fill the gap all the way up there. You're looking at weakness. Why are you looking at weakness? It's the 10-year bond. Let's go over the heat map first. Yesterday's heat map, horrific. Big red right there. Tesla, huge red. BlackRock, 7%. Morgan Stanley, you're looking at financials. You're looking at it across the board. Even Eli Lilly was down 3%. Look at real estate. Your REITs are just getting killed. Railroads, United Pacific up 2%. It's just a bloodbath, except for Netflix up 16%. And Netflix is up again today. CRM, Salesforce up 1%. ServiceNow up 1%. Microsoft up 0.5%. You got a lot of these chips, the semiconductors down. What's going on? It is the 10-year. 100%, it's the 10-year. The 10-year right now is at 4.95. This went over 5% and pulled back a little bit. This is what's hurting. Understand, the Japanese are no longer buying our bonds. The Chinese are no longer buying our bonds. So what happens is the yields go up because people want to pay less. And so the price of the actual bonds go down because there's no buyers. It's a simple market reaction. And until this is done, we have problems. And Jay Powell yesterday ignored it, kind of like he ignored inflation. And he sat in there too long, waiting to fight inflation. And so now you had a historic run-up. Kathy Woods, who's an economist, says she hates Jay Powell and he's ruining the economy and blah, blah, blah. She's kind of right. He's just, and it's not Jay Powell's fault. The Fed as a whole, as an organization, typically just stays too long. And they don't do things quick enough. You don't want things done in the economy very quickly because then you can lead to unintended consequences. And we're still the greatest economy that this world has ever known. So, he's doing things measured, I would say. But I don't think that a rate increase is likely in November, maybe December. That would be my guess. But I don't see any time he's actually pulling down rates. And that's what you've been hoping for with SPY. And SPY has been pricing in that at some point. You can see the MACD is crossing down. Our RSI is at 38. You're not completely oversold. But that 10-year is actually killing it. So one thing that I want to talk about, and I'm not really going to talk about it too much, but I will put it in the newsletter, is this psychology. This is the psychology of mathematical principles of profitable trading and how understanding this can help you become a better trader. And it's drawdowns. It's required win rates. The drawdowns you can see. In order to, when you're down 90%, you have to go up 900% in order to recover. So you want to take these mathematical equations into consideration. I'm not great at math. Your boy is a bit autistic when it comes to math. I just look at things and I understand things, but I don't do well with numbers. I will, exaggerate numbers 90% of the time. I'm exaggerating the numbers. There you go. But I'll include all of that with a little commentary in the newsletter. And by the way, if you're not subscribed to the newsletter, it's dailystockpick.substack.com right here. Yesterday's newsletter, Netflix killed it. Tesla is down. And we talked about Devon might be buying MRO, Marathon Oil. So you can take a look at this. It's free. The Weekends does have a paid subscription. It's typically more educational than it is kind of, hey, here's the market kind of stuff. And it's really the way I see things, the way I do things and stuff like that. You may not want to, listen to me if you followed me into SEDG. You probably are cursing me right now. SEDG. This is Solar Edge. And we talked about Solar Edge. If you're new to the podcast, this circle right here is where I bought, saying, hey, it's going over 300 because it's gone over 300 all the time. Well, this is the consequence of higher for longer. And they reported earnings here, and it was a disappointment. I waited for earnings. Excuse me 1 second. They reported earnings after Enphase had significantly downed their forecast, and Enphase, which is focused in California, SEDG, which is focused more in Europe. This is one that I bought here, and I was considering dollar cost averaging. I have not added to this. I wanted to wait until it had confirmation over that 9-day. It never got confirmation over that 9-day. So where are we today? We're down at this buy was up here at 250. I think I may have bought it at like 260, somewhere in that neighborhood. In fact, let's go over to Savvy Trader, because we can look at let's go to Daily Stock Pick, savvytrader.com/Daily Stock Pick. If, by the way, don't remember all these links, just go to Linktree, linktr.ee/Daily Stock Pick, and you can see all of that. If we go over here, I have two portfolios, the trading portfolio and the core portfolio. The trading portfolio, we can look at this, and we can go over to SEDG. This is where I journal a lot of my trades. Here we go. It was a $2,577 buy-in for SEDG. I bought at $257 when the algorithm said buy at $251. Now, here's the thing, and this is why it was such a bad trade. I said it was getting up to 300. Well, where did it get to? It got up to 288. I had a great gain on this one. Just in what? From June 27th to July 17th, less than a month. Great trade. Lost confirmation. I should have been out. This is where journaling your trades comes in. I should have been out. I should have been out at around 270. That's absolutely 100% where I should have been out. FOMO, greed, just thinking that this was getting to 300 and I should just add to it. Absolutely 100% a mistake. Higher for longer. Got this one. And where is it now? It's at 76. It's at 76. We are down. Let's see. Let's go back to Savvy Trader. We are down 70%, $1,827. I will be selling this today. There is no reason to stay in this one. Shares plunged 20% after the solar company lowered its third quarter revenues to between 720 million and 730. CEO Zvi Lando said the company experienced substantial unexpected cancellation and pushouts of existing backlogs from its European distributors. Substantial unexpected cancellations and pushouts of that means people are canceling. Higher for longer is killing this one. They don't want to install solar. Even Brad from Stock Market Nerd right here posted about this one. He doesn't own SEDG. He doesn't follow SEDG. This is 100% getting into the larger economy. It's just hitting SEDG hard right now. But the rest of these are unintended consequences of higher for longer. Tough times to be in the cyclical solar energy space. SEDG, 20% light on revenue, 900 basis points lower on gross margin, 80% light on EBITDA. Yeah, it's getting hurt, and it's getting hurt hard. So I would not, while I'm good on some, this one, complete loss, but I will be getting out of this one 100%. I don't believe in this company anymore. I don't believe they can turn it around. So I'm getting out. Where am I putting that money? Probably into another one of the core portfolio. And that's kind of the point. If you want to follow the core portfolio is for free here in Savvy Trader. You can follow it. It's 35 stocks right now, 36 stocks, somewhere around there. I'd like to get it down to about 25 or so, but these are quality names, good companies with good earnings. There's a couple in here, like Coke. I still have Coke. I still have Pepsi. I've got to probably update this one a little bit. But yeah, these are quality names. If you like Seeking Alpha, one of the features that I really like about Seeking Alpha is that you can include the core portfolio in here. And Seeking Alpha actually rates the core portfolio. Well, what does it tell us our health of the core portfolio is? It says, awesome, you have 8 stocks that are rated high. I have nothing rated that a sell, a strong sell, or not covered. Great. How do you compare? Your portfolio is in the top 29% of all portfolios, 3.62. That's great. What do analysts think? Watch out. You have one stock that's at risk of performing badly. What's that one stock that's at risk of performing badly? It's XLY. That's the only one. Your dividend safety score. Be careful. One of your stocks has a risky dividend play. Let's see. What's the one stock with risky dividend? TSM. But you know what? We'll take a look at TSM because they just announced earnings. And it was pretty freaking good. The thing you have to worry about TSM, just full disclosure, is China. It's China. But you have 15 stocks with high safety ratings. What are the strengths and weaknesses of your portfolio? It's valuation, because I'm heavy tech. So the valuation is crazy. Profitability, A. Momentum, B. Earnings per share revisions, B-. Growth, C+. So I like this. You can import your own portfolio. Again, I have a coupon code down below. I think a year is $189. I really like this. This is just one of the features of Seeking Alpha. The other thing that I really like about Seeking Alpha, and this is what I was goofing around on YouTube with, is the trending news. I could geek out on this all day. In fact, I have a bunch of links. Let's see. Mara, one of the things we found in the trending news was Coinbase legal chief expects SEC will approve a Bitcoin ETF report soon. Well, what did that do to Mara? Mara today is up, 6.87%. Like I said, buy this one. It's going back to 10. They announced a Bitcoin ETF. This is easily at 10. Easily at 10. Coinbase, probably a good bounce as well. I just like Mara because they actually they mine. They're a miner. So what do? They mine Bitcoin. They mine the other cryptocurrencies in large scale. And they sell when it's high, they buy when it's low. Essentially, when you mine, you get rewarded cryptocurrency. So it is expensive. I understand that. But that's just one of the things that I found. The other thing that I found, Eli Lilly. And I was going off about this. I'm not sure this is the right thing to do. But Eli Lilly and Novo Nordisk, they're eyeing obesity meds for kids as young as 6 years old. Do I want to be in a world where kids are getting shots for obesity? I don't know. I mean, there's definitely some issues with genetics and things of that sort that probably could benefit from this. It's also the food that we give our kids. So, and listen, I just got done watching that great game last night between the Jaguars and the Saints. Kudos to the Saints, man. Those guys put up one hell of a fight after being down. But those linemen, they need the obesity. They ain't taking this weight loss drug. But this is what's kind of driving a lot of the Walmarts of the world, the grocery chains of the world, the Cokes, the Pepsis. This is what's killing them, is the fear of these drugs coming in and actually reducing the profits of the food makers. So, I found that one. Eli Lilly, by the way, nice little pullback. We talked about this one getting to 600 and how you probably just want to buy it. It's up 592, but see that little turnaround there? I mean, you got that little button hook. You're still in at 544. I wouldn't worry too much about this gap. I just don't think this is the weight loss drugs are the new AI. I mean, let's be honest. AI has not performed great of the past 2 months. You've kind of just capitulated around the prices with most of the AI folks, other than SMCI and NVIDIA, which has significant volatility that you could trade. But these drug makers, they just haven't had the volatility. It's been, if we look at a weekly on this, it hasn't pulled back. I mean, you've been hanging around that 50-day. And if you want to wait for that 50-day to come into play, you may just miss out. Not a horrible thing. I mean, you could always, the valuation of this, the expectation is this is an enormous market that they're tapping into. We went over yesterday how oil, I think oil is absolutely still a big one. There's some ETFs. I will put these in the newsletter: USO, BNO, UCO, SCO, USL, DBO, DRIP, GUSH, NRGU, USOI. I'll put those in. Those are ways to play the oil market, and do your research. Understand what you're buying. Your boy here got into oil when oil back in April of 2020, when oil was at like $6 a barrel. And I said, oil's got to go up. And so I bought UCO, triple levered on the futures. Well, what happened? UCO wound up reverse splitting. And I didn't know that oil could go negative. Nobody thought oil could go negative. The oil companies were paying to store their oil on ships, in caves. They were paying anybody that would take the oil so they didn't have to shut down operations because the world wasn't using oil. So just understand you need to know what you're investing in. This is 4 stocks to watch today. And this was interesting. I took a look at this one. Shares of Jazz Pharmaceuticals added 5% in pre-market after Bloomberg reported that the Ireland-based drug maker was exploring strategic options, including a potential sale of the company. It's a pharmaceutical company, so it's outside of my area of expertise. But one of the expertises that I do have is reading this chart. And if we take a look at this chart and we understand how buyers look, so if a company's coming in to buy this company, this is just 2 years ago where it was 185. That might be where a bid comes in. Might also be here at 169. Either way, it's going to be over that 200-day. If they're exploring a bid for sale, it's going to come over that 200-day. And if we look at this, right now you're trading at 134. Let's go over here. I'll use the free version. We'll look at FinViz to look at some of the valuation. They're losing $86 million. Not great in a market like today. The forward PE is 6.56. Year to date, it's down 16%. Target price is 201. Let's see how often it's covered. Well, you've got 2 initiations this year. One, Wells Fargo in June. Equal weight, they reduced the price target from 184 to 140. Where you're trading right now, 133. Not a great price. September 29th, Raymond James initiated but didn't put a price target in there. So you do have some issues with this one. Price to sales, 2.23. That's not huge. That's not enormous. It doesn't have a dividend, 2,800 employees. I would take a look at some insider sales. You can see they're selling at about 138. This is a director, an EVP. If they are exploring options to sell, probably not a great time to actually sell. But they're only selling like $171,000 worth. Let's see. Yeah, each director looks like they sold the same exact amount. Something went on there where they all got together and maybe they had to reduce their exposure or something. The EVP, Chief Legal Officer, sold 1,500 shares, $216,000. Understand that this has a market cap of $8 billion. This is not much for people who run an $8 billion business. These people have millions and millions of dollars invested in this company. So they're probably just putting in pools in their backyard. So great opportunity. Again, this was found from just on Seeking Alpha. I geek out on Seeking Alpha. I could sit there and read the articles all day. I don't know, honestly, between you and I don't know what's paid. I don't know what's free. I know the portfolio thing is paid. So if you're somebody, so let's say you listen to my podcast, but you don't really understand charting, you don't know charting, and you don't have an interest in actually learning charting. You want something that is more emotional. You don't want to take emotion out of your trade. You say that, hey, I want to just buy and hold. That's where I think Seeking Alpha comes in, because it can take a look at your portfolio. It can offer you options. You can sit there and read news all day. You can join investing groups. You can look at the news. You can do analysis. You can do your charting. So for instance, let's say we talked about Devon potentially buying Oxy. Let's see how those two perform against each other. We can go to charting and we can just select symbols and we can type in, it's Marathon Oil, not Oxy. Marathon Oil is what they're buying. So here you go, over 1 year. You can see the S&P is beating both of them, 15%. Marathon's up 3%. Devon is down 27%. You look at 3 year. This is going to be looking a little bit better for the oils. Devon is up 533%. S&P up 24%. Marathon Oil up 603%. So the oils greatly outpace on a 3 year. It's a 1 year and the year to date. Where Marathon clearly beats year to date. I mean, Marathon is up 13%. The S&P is up 11%. So that's where I like Seeking Alpha. I think it provides a great opportunity there. But if you listen to me, and you know, my king daddy is TrendSpider. This is the one where I kind of put my bread and butter. And the reason was I started this was in COVID. My buddy Steve and I developed an algorithm to protect us from the COVID downturn. Look at Dexcom up 13%. Dexcom is a beaten down drug. Diabetes monitoring system. Just beaten down, but it's at $86. I think that gets back to $100. But there's some dangers in there and some extreme dangers with competition from Apple and others. But this King Daddy of TrendSpider, we developed a 4-hour algorithm to protect us from the downturns of COVID. Do I always listen to it? No. SEDG is a great example, like I said earlier. I don't always listen to the algorithm, but I actually understand the algorithm, and I understand that the 9-day is my key point of confirmation, and understanding that is key. If you look, Taiwan Semi, we got another leg up going on in Taiwan Semi. You had your earnings. They were very positive, super positive. $86 was the buy here, September 28th. You're at $93. You just got another leg up. This got another alert on my algorithm. And right here is the 200-day at $95. I think you go back over that. I can see a gap right here at $97 that hasn't been filled. Might get filled. Just understand that 200-day. The 50-day is just starting to turn positive. But that 200-day is going to provide significant resistance. So I don't know that I'm buying it at 93, waiting for it to get to 95, but we do have a second leg up there. The RSI is at 65. Take a little temperament. The only reason I bring that up, this is the only stock in my algorithm that within the last candle triggered a buy within the daily stock pick core portfolio. It's the only one. Yesterday was just horrific for stocks. So that one, it's up 1% today. And it was up after earnings. You got a nice gap here between the earnings of 89 and 92. Wait for a couple of days. You'll probably get to buy this one under 90 But I do think long-term, this is a great, great company. What's interesting about scanning this morning and the scans, the only thing that really came up, and they came up big, are the levered ETFs. And the levered ETFs all on the short side. These are all bear ETFs that got additional triggers to buy. SRTY, which is Ultra Pro short of the Russell 2000. That had it buy here at 42 on September 7th. We are clearly in a downward market. Clearly in a downward market. When this goes up, the market is going down. This is a short of the Russell 2000. SMDD. This is an Ultra Pro short of the Mid Cap 400. This one had a new buy here at $21.31. The algorithm got you out on October 11th. Last time, it was a buy here September 7th. So 1 month, 8%. Again, this is a short of the Mid Cap 400, SMDD. SDOW. This is a short Ultra, which means it's 3 times levered, of the Dow. This one got you in on September 19th and got you out with a nice 6% gain on October 12th. So it's almost a month. Gets you in again today. The RSI is a little bit high on this one, but the MACD's crossing up, 26.47 on SDOW. Now, real estate. We talk about DRV and DRN. DRV, which is the bear, 3 times levered bear. This got a buy yesterday at 63.71. We have one at 63.48 right now. It's trading at 65, 65.69. It's down 1% today. So again, all of these are short. Another short one, FAZ. This is the financial bear, 3 times financial bear. $20.89. This is just getting you out of a 6% gain. We're not done. SDS. This is what's crazy. ProShare Ultra Pro short for S&P 500. Another one, 36.66. Now understand the S&P 500s, most of them will get the same trigger because they should follow the S&P 500. Sometimes they don't. And understand volume. You're going to need to, SPXU is probably the biggest one, I think, as far as volume goes. But understand getting in and out of these might be tough if you see some big moves. So you want to make sure that your brokerage is, you're putting in your stop losses at the appropriate price. And just understand it might not, might go down a little further if we have some type of catalyst, huge up. If you have some type of catalyst where, all of a sudden Jay Powell says, hey, we're cutting rates next week. And the market goes up 5%. Well, these are going to go actually down because these are short the market. So when the market goes up, these are going to go down. HIBS, S&P, high beta bear, 3 times short. HIBS, I've traded this one in the past. SPXU, this is the Ultra Pro short S&P 500. This one got you in on September 15th at $10.82. Got you out at $12.60. I'm sorry, with a 4.5% gain, got all the way up here to 12. It got you in yesterday at $11.68. You're at $12.16. This is what's going on. This is clear as day. We are not in a confirmed upward moving market yet. All of these short ETFs identify that we are in a downward market. So I want you to be careful if you're buying. You can trade these ETFs all you want. But if you're buying for the long term, this is the time that you want to identify the stocks that you want to buy long term. This is where it becomes difficult. Buying in the long term is when you want to buy down. Look at QQQ. You're under the 200-day. Let's go to the daily. We'll just go to the daily on the Qs. If you're buying for the long term, you're not even at the 200-day. We talked about this, back here on September 28th. You're still 7% above your 200-day on the daily. Remember, the 4-hour algorithm triggers a little bit faster than a daily because it's 2 candles instead of 1 candle. If we go to the weekly, you're still probably in an upward trend, a significant up. Yep. Look at that 50-day, still positive. Look at the 9-day. I mean, you had confirmation all the way up until last week. You got confirmation. Now you're back down below confirmation. The 21 still positive. The 9-day still positive. The 50 and the 200 is still positive. You got a nice volume shelf down here at 331, which is a nice 10% down from where you are now. So Again, pick your stocks. Understand you want to get into stocks. The core portfolio is key for this one because these are stocks that I personally own, that I believe in long term. And they're good stocks. These are not ones, Boeing. Jim Cramer was on air the other day crying about Boeing, how he made a mistake on Boeing. I don't think he made a mistake. I just don't think he bought in at the right price. He bought in around 200. I say anything under 200, you get this stock. Anything over 200, you can absolutely sell it. He doesn't necessarily agree with that trading philosophy, but that's my thing. That 200-day right there, that 200-day is at 203. That's where I got the 200 mark. And down here, this was at 241. Look at that 200-day moving down. The $200 price point is the 200-day moving average. Now, you've got a golden cross here on the weekly. That's why I say I don't think this one's horrible to buy right now. You got that golden cross September 25th. Yeah, we're in a weak period. At 183, am I buying more? Yeah. You got earnings coming up next week. Let's talk about Savvy Trader. We'll go over the earnings. One thing I don't like about Savvy Trader, and I have been a big fan of Savvy Trader, is that they moved earnings. You have to upgrade to Pro to look at your portfolio for earnings. Don't like it. Completely understand. They're there to make money. This is not a free service, so I get it. I may upgrade to Pro. I don't see the benefit of Pro right now. I don't get what they're doing with their service at Savvy Trader, but I'm going to continue to use it, the free service. Let's look at next week, because next week we have some big earnings. We've got Microsoft, we got Google, we got Visa, we got Meta, we got IBM, we got ServiceNow, we have Amazon, we have Intel, we have Vail, we've got ExxonMobil, we've got Chevron, we've got MasterCard, we've got Merck, we've got TMO, Thermo Fisher, we got Coke next week. Will they succumb to even more pressure on the dollar side? Will they cut the dividend? This is a dividend aristocrat. I don't know. They're supposedly getting hurt. Verizon, AT&T beat. Will Verizon beat? You've got a lot of earnings next week. This is a big week on earnings just because you got big movers. This is going to move the market. Microsoft, Google, Visa. Meta is the one that I really want to focus on because I think Meta is one of the best opportunities out there. I think under 300 was the buy. Absolutely. Can you buy here at 313? Absolutely. I think you could buy here at 313. This is one stock that I don't think has performed horribly in this downturn. Look at that. 307 right there, September 29th. You got to buy in the algorithm. Hasn't gotten you out. Probably will get you out here soon. The algorithm has some moving averages in it, so it may get you out here soon if we continue to slide. I would say that 309, if you want to get this before Wednesday, I would say that 309 price is probably good. That's right around the 50-day. And the 50-day is a good tenure on this one. What you want to make sure of with Meta is that they continue to cut prices or cut spending. If, for instance, he's going to go out there and he's going to say, hey, I'm going to spend more on the metaverse because we're making more money. That's where you kind of get into, hey, douchebag Zuckerberg, stop spending. Nobody's putting on goggles to sit in the metaverse. He's selling the goggles, I think, at a loss, if I'm not mistaken. But you're at 18 times forward earnings, 1856. That's nothing. If they continue to grow, the problem that you have is you're up 160% year to date. It's not crazy, but what's the target price? 284. And you're at 313. So it's a little bit over. Now, that 284, it's not crazy to think that you could beat that. Look at these. Most of them are at 350, 380. That's a big move from where we are now. You got that double top that you got to get over at about 330. 330 is kind of, if they don't announce something crazy, like really good earnings and stuff, but let's be honest. I use Facebook for this podcast. I use Instagram for this podcast. I probably should use WhatsApp for this podcast. But there's so many things there's so many ways. If you're a target marketer, Facebook and Twitter's not horrible, but they still don't have a very good interface to target market. And the response that I hear from my marketing friends is Twitter is just not that great. Facebook, Instagram, probably the best. In fact, we talked about my friend owns a food service business. And she said the response from Instagram, great. Response from Facebook, it's okay. But yeah. So just understand where we are. That 10-year, 100%, that 10-year is driving this. So understand as we get to 5%, unless buyers start to show up, we will not see the second leg of this. Even if earnings are good, we will not see the second leg of this upturn until we get some type of resolution within the bond market. That's what's hard about this market. But what I want you to do is identify your long-term buys. Do you want to buy Apple? Apple, we look at Meta. Look at Meta's at forward times 18. Look at Apple. Apple forward times 26. That's expensive. I haven't been touting, hey, buy Apple here at 175 because it's expensive. If there's a downturn of iPhone sales, the market's going to rip into this one. Am I trimming? I've trimmed at 190. I don't know that I want to trim at 175. I do hold a decent amount in my retirement accounts, but I own more in my brokerage accounts, and that causes a tax event. I don't need money. So do I want to actually trade it and sell it now and buy it back later? Maybe. Here on the 4-hour, you're below that 200-day. We talked about the 200-day providing resistance on other stocks. It does on Apple too. And 200 days at 182. You had this death cross of the 50-day right here at September 7th. If they come out and they say, hey, we've lowered our production costs because we've moved to India, or we have more production, and that's why you're seeing some weakness on iPhone sales. You just don't know about this company. Now, I am, it's funny because Substack with the newsletter, the paid newsletter, Apple, when you sign up through the website, Apple takes 30% out of the subscription. So, I charge $80? I think it's about $8 a month. They take 30%. I lose almost half between the Substack fees and stuff like that. I'm not happy about it. I get it. They built the platform that they provide the services. So they take the money. Is it fair? Well, European Union doesn't think so. And I think the American government doesn't think so. But why not buy the stock? Because that's who's making the money. So I don't mind sitting here. And if it gets back down to 169, maybe I'll add more. But I don't feel like selling at 175. Not my thing. I just kind of believe in it long term. Amazon, we talked about Amazon. Get it under 130. I like this stock under 130. It's under its 200-day right there. It's got the death cross, so it might go lower. I just like that Amazon stock. AI, I think Google, which reports next week, I think Google's fine. I think they're going to report some crazy stuff with AI. The cost of AI versus the traditional search is what's going to bring Google down. But I don't think they're going to announce anything like that. I think at 140, we talked about Apple being 26 and Meta being 18. Let's look at Google. The forward PE of Google. It's 20. You're right in the middle. So it's not crazy. And you're only up 55% year to date. And they had a horrible year last year. If we go over to Seeking Alpha, and let's just we'll look at Google. And we'll type in some of the other names. Let's select symbols. We'll get rid of the S&P 500. We'll put in Meta. We'll put in Apple. We'll put in Amazon. We'll put in, let's put in NVIDIA, since we're talking about AI. And 5 stocks. It's probably good enough. Let's just take a look. And you're looking, see? This is 1 year. Google's up 38%. Apple's up 21%. The big laggards, Amazon, up 11%. You got Meta up 134 and NVIDIA up 249. Year to date, same kind of thing. Google's up 54. Apple's up 39. Amazon's up 48. But NVIDIA and Meta up huge, 194 and 159. So you go out even 5 years. Look at Google, 149. Look at Meta. It's only up 100%. I say only. But Apple, 217%. Amazon, 42%. Just to understand that ARK funds, she says The goal of the ARK funds, investing in growth, it's to double your money. So it would be 100% return in 5 years. The traditional S&P looks to double your money, I think, in 7 to 10 years. I think that's the one. NVIDIA is up a crazy 625% in 5 years. So this is what you want to keep an eye on. Where are we? This is why NVIDIA is crazy. I mean, if we go over here and look at NVIDIA, the forward PE of NVIDIA, I think, is like 40 something, 25. But they're growing so much, that's actually coming down. The PE is 102, but they're growing so much. That's crazy. But yeah, so be careful in the market. Understand, some of the things that are going on. The 10-year is the key. TrendSpider. If you want access to my 4-hour algorithm, we talked about seeking alpha. TrendSpider right here. You get it for, let me see. I think it's $480. Let's look at TrendSpider right now. Product. And we go to plans and pricing. You're going to click on it, Linktree. linktr.ee/daily stock pick. It's $468 for a year. So you'll click on that, you'll sign up, and then you'll email me. You'll go back over to Linktree, and the email is right here, dailystockpick3@gmail.com. You'll do that. Seeking Alpha, simple. You don't have to email me. Just click on that, sign up. Webull, we talk about Webull all the time. I think Webull is great. I go on Webull. Seeking Alpha has kind of taken over Webull for me. And the only reason is because I get more out of the computer stuff than I do on Webull. And I need to start using Webull on the computer because they have a good platform. But Webull is great for me for the app. I love the app. Let's see where I'm on Webull. I put $1,000 in there at the beginning of the year. Right now, I am at $23.95. I keep fluttering between $2,400 and $2,300. But yeah, I like Webull. The newsletter we talked about, it's free. Just go and sign up. Visible, if you're paying anything more than $25 a month for your service, sign up for Visible. Use that link, and you'll get $20 off your first month service. If you look at their plans, here's what it is. It's simple. It's no hassle pricing. There's no taxes. There's no fees. It's $25. One price, $25. If you want the Visible Plus, it's $35. You get international mobile. The mobile hotspot comes on both. We talked about me in Philadelphia last week. The Wi-Fi in the hotel went out. I did this podcast with the mobile hotspot. It was great. And I'm on the $25 a month plan. So that's the key for that one. If you buy a Tesla or you want to buy a Tesla, get $500 off in 3 months free of full self-driving. Click right there. AT&T Fiber at your home. Go and check out if you have AT&T Fiber. I had a friend here the other day who was working with TurboTax, and the lady at TurboTax was like, "Wow, your computer is so fast. I can't imagine how fast your computer is." It wasn't our computer. It's because I have 1 gig service, 1 gig symmetrical. It's fantastic, unbelievably good. So Savvy Trader, we talked about Savvy Trader. I like Savvy Trader. Go and follow me on Savvy Trader. It is savvytrader.com/daily stock pick. And you can follow either the trading portfolio or the core portfolio. The core portfolio, I don't make many changes. Even the trading portfolio, I don't trade much, but I will be trading SEDG today. So there you go. And you have other stuff if you want to tip me and stuff like that. But that's it for the podcast. I will be back Monday. Let's hope we have an afternoon rally today. I think we will. I think that the 10-year hitting 5%, I think it's going to back off a little bit. So I'm hoping on that one. So, okay, take care. Have fun. Enjoy your weekend. Paid newsletter tomorrow. Bye-bye. Enjoy the AI song from, and I still got to do that video. Oh, man, I got a lot to do. I don't work. So I hate work. Okay. I'll do some videos for you. Take care. Talk to you later. Bye. Okay. Let's see. Christian, y'all should read Benjamin Graham's Intelligent Investor. The math principle you're talking about is his equivalent 1/3. Yeah, that math principle, I like it. I mean, it's crazy to see how investing the VOO and chill kind of stuff that I talk about, Christian, how that works well for most because they just don't want to deal with it. But if you want to deal with it and manage your portfolio, I'm shocked at how much those math principles come around. Sedge the hubris. Scott, you're right. I think he was crying about Boeing, though. The hubris. Yeah. It's the, let's see. Let's Google. Let's go to YouTube. And we're going to go Jim Cramer crying on Facebook. Meta. That's what we have to do. Yeah. Let's see. This is, how long is it? 2 minutes, 23 seconds.
Switch to Google Fi
God,
Wireless
CNBC
and get
putting this
Simply Unlimited. Our most affordable unlimited plan includes 4 lines for just
No, I don't want that. Here it is. Jim. Oh man, did he pay to have this? What were you? Let's type in hubris. Meta. Oh God, man! I bet he paid to have it wiped off. I bet he paid to have it wiped off of or changed. Let's see. We're gonna go. Jim Cramer cries over Meta hubris. We'll just Google it. Tears up. Apologizes on TV for trusting. There we go. This is what we want. There we go.
Free cash flow last year, 9.5 billion, now less than 1 billion. Yeah, let me say this. I made a mistake here. I was wrong. I trusted this management team. That was ill-advised. Hubris here is extraordinary. And I apologize.
Okay. What did you get wrong?
I had a belief that there was a recognition that there is a amount that you can't spend. Contrast that, for instance, with Jim Farley, who took a project that was his, Argo, and closed
Jim
it
Farley.
because it was not ready.
We can talk about
It
Jim
was
Farley
not
of
your-
Ford.
This situation.
That's his friend because he texts
almost
him on a
a
regular basis.
I had thought there would be an understanding that you just can't spend and spend right through your free cash flow. That there had to be some level of discipline, and I didn't get it. But David,
What a douche.
what did I get wrong? I trusted them, not myself. For that, I regret. I've been in this business for 40 years, and I did a bad job. I'm not proud.
You're not
I'm
alone.
proud.
You're not alone, Jim. Morgan Stanley today
You're not
downgrades
alone,
it for the
Jim.
first time ever.
Carl
to
Consoli.
equal weight, target of 105. They call it thesis changing. What happened last
I
night?
think that's fair. When I discussed this with my wife, Lisa, because this is all I talked about last night.
They talked
How
about,
disappointed I was.
yeah,
not
that
in
and the
them, but
Baconator.
myself. I think that's true. Was these
Yeah. Oh. Let's look at Jim Cramer. Wife Wendy's. This is an unbelievable video. Oh, and I gotta say,
They say break bread with your enemies.
You're not wanted in this town.
I say go further.
this is good.
Now this.
And now, Jim Cramer presents
He had to apologize
Grounds
to his
for
wife for
Divorce.
Let's start with Wendy's. I
I like Wendy's, and not just because my wife can put away a double Baconator quicker than anyone. They've highlighted my wife eating a juicy Baconator all over her car. My wife is with this Baconator. She's crazy about it. She doesn't even care. It's like, boom, all right? Anyway, my wife had a Baconator. Holy cow. That's tough to work off, by the way. My wife had a Baconator during vacation, which, you know, is obviously a bulk-up situation. Sure, my wife championed that Baconator, which, you know, you got to go to Planet Fitness right after. My wife's a Wendy's person. She likes the Baconator. My wife just loves the Baconator.
I know your wife likes to trade into that Baconator on a regular occasion, so we love that too.
And she loves the Baconator. I did have to stop my wife yesterday from getting a Baconator. I said, enough is enough. It was trading in the mid-single digits, and that was because my wife liked the Baconator. She actually likes the double cheese Baconator. Once again, happy birthday to Lisa.
Happy birthday, Lisa. So he had to go on air. He went on air and apologized to his wife because he said she was going to divorce him. That is so good. So good. God, there's so much fun to have at his expense. Bank of America giving back the 2%. Wow, it had that nice pop after earnings, and it's just come right back down. Yeah. We had this gap. Gap got filled. Just financials. I mean, God. Show. Douche on the internet. I had to show that. For some reason, Scott, it didn't show your douche comment. It prohibited it. Sedge, the hubris. What do you think will happen to Bitcoin miners after the halving? I don't follow Bitcoin, crypto enough to understand the halving of it, but I can't imagine it's going to ding them. Let's see. Bitcoin miners halving. Let's see. Bitcoin halving is when the reward for Bitcoin mining is cut in half. Halving that takes place every 4 years. The halving policy was written into Bitcoin's mining algorithm to counteract inflation by maintaining scarcity. That's an interesting one. When is Bitcoin? Let's see. When is Bitcoin mining halving? April 2024. You're a ways off. You're ways off on that one. What do I think will happen? I think they just, my understanding of the way mining works, Christian, and again, I am so not an expert in this one, but I don't own crypto. I do own some through ETFs, where they own crypto, but, I think they'll be fine. I mean, it just cuts their profit margin in half. But I think, what's Mara's margins? Let's see. Mara. Marathon Digital Holding profit margin. Here we go. Here's the gross margin, operating margin. That was probably the halving, wasn't it? Let's see. May 2020. The best look at the past is the future. It didn't have an effect. I mean, now mind you, they're losing money, but it didn't have an effect. Didn't look like it had any effect there. Let's see. Riot. Let's look at Riot. Okay. Oh, is it the ad blocker that's stopping this from working? I don't know. I don't use this site. Macro Trends is pretty good, actually. I've used it before, but I don't use it recently. Hey, congrats, D-Man. More money to invest. It's the way I always looked at stuff. I got more money. I never looked at it like, oh my God, I've got more to spend. Let me go grab my computer real quick. Sorry. If you've been here since the beginning, you know I am defrosting my fridge. So you're going to hear a beep, 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 beep in the background. But I thought today was okay for a podcast. Share. AirDrop. Oh, come on. Don't tell me to turn on Bluetooth. Why does Bluetooth keep turning off for AirDrop on this computer? Share. AirDrop. In theory, I think you're right, Christian. I think you're 100% right in theory. But I also think miners, their business proposition is just different. I don't know enough about the business propositions, but there's such small overhead for those huge miners like Mara. How long was this, by the way, this podcast? It was 41 minutes. Hoofa. I talked a long time. Looks like some stuff's coming back. Goldman Sachs under $300. That's crazy. I mean, Goldman Sachs book value, I think, is 309. Let's look. Cent. Their book value is 310. That's just crazy to me. Okay. Look, September 7th, 403. Uber at 42. Uber's got to come back. You do want to be in that name before the higher for longer. I got to tell you, so my Uber driver told me she back in Dallas, or I'm sorry, Philly. She was driving a Model 3. She told me about how Uber rents her the Model 3 at the beginning of her shift. And she's got to pay for fuel. So even when Uber rents you a car as a driver, you have to pay for the fuel. And so she winds up getting the electric. She says it's crazy because she drives overnight a lot, so she gets cheap rates on electricity. She's got to stop every couple of hours to recharge at a supercharger. But she says it's by far the most economical. She says it actually saves her per night, somewhere because of gas prices, somewhere in the neighborhood of $100 to $120. It saves her over the price of getting a gasoline car from her earnings. So, God, shit is just down. I mean, Costco down 1.7%. Bank of America down 2%. Amazon down 2%. Devon down 1.97%. Microsoft down 1%. Netflix is holding on to that 400. Nvidia down at 417. PXD down 1% at 252. Starting to get that button hook. You know what? I am going to trade SEDG now. Let's see. We're going to take that out. We're going to take that out. Going to take this out. Boom, boom, and then we're going to find her. Downloads. Let's see.
Good morning. It is Friday, October 20th.
Have to.
On YouTube Live, but I also, and it is. Good morning. It is Friday, October 20th.
Okay, and let's do that. Let us fit. Then we're going to go to the color, reduce that, increase that, export file. Then I can sit here and just pod desktop. Save. HUBC. The trash does seem to go up. I mean, just shit that has been down goes up. But I'm looking at Qualcomm down 1.5. I'm looking at Roblox down 1.7. I'm looking at Shopify down 1%. I'm looking at SMCI down 4% to 254. This broke through the 200-day like it was nothing. What's interesting is that 245 right there, you had a nice 10% gain here. But it's that button hook. I always talk about this button hook. This is a perfect example of a button hook, okay? We're going to take this, this. So remember, the button hook is a half a circle. And we're going to take that there. That's a half a circle. I mean, there's a little bit more bump there. But that's what I mean about button hook. It's a perfect example. And if you're trading SMCI, you can get out. I'm going to buy more. I mean, look at the RSI. If we go and look at the daily, you've lost your confirmation. You're nowhere near the 200-day. I mean, I bet you're coming down probably, I would say, 220 before this is all done with, all said and done. I'll add more. The valuation's not crazy. Talk about NVIDIA. We just read that SMCI article. Did I put that in here? I think I did. Well, where was that? That was on. Let's do Seeking Alpha. Breaking news, Biden seeking $105 billion in new funding for Ukraine, Israel, and other security. This is why SMCI fell. Higher interest rates overshadowed the company's announcement. Higher interest rates, I mean, that's essentially it. But do you think higher interest rates matter with these AI companies? 10% short interest? I don't believe. I believe in this one. Palantir down 4.69%. Palantir's one, it's just kind of hanging on that 200-day. So, okay, I am out. You guys have a great weekend. I will talk to you later. If you guys have any questions, you know where.